All right, hey everybody, this is Ron Haight. Happy Tuesday night. How are you guys doing? I'm going to open up the Q&A in the chat box. Hello, and happy pre-Merry Christmas. Happy belated Hanukkah, happy Kwanzaa, and everything else in between. Let me pop this question box out. Hey there, Walter, can you hear me now? I just turned my microphone on and I just started the webinar. All right. Hey there, SP, how are you doing? Good evening to you. So we're going to have a lot of folks joining us. I can see that you are filing in right now. All right, hey, Oak Walter, fantastic. So you can now hear me, great. We're going to kick off here at the top of the hour. The slides that TradeThirsty had put up just talked about some of the trade ideas we've talked about in the past and how they've been working, the power of seasonality in the markets, the power of the big money. So that's what we're going to do tonight. Within the first 5 minutes of going live, once we hit the top of the hour, I'm going to send you guys home with the hottest stock picks to kick the new year off with a bang. You betcha. And it's free. That's the best part. So the reason, yes, I've been here before, Jake. The reason I come back is when I give you guys these trade ideas, they just keep working. And it is something. In fact, I can bring up the slide here. Let me go back up to slide 1. You guys should be able to see this on my screen, but I was back with you guys back in 2019. So I've known Jeanette and Hubert a long time. And they had me come in 2019. We talked about, there it is, these trade ideas, and they worked really, really well. Then I told you a year ago to keep an eye on one stock when we hit November. I can do this 6 months in advance, a year in advance, a week in advance. We can look for the hottest stocks. And I said it was Disney. And this is even pre-COVID. And I told you, get the popcorn, get ready, and it did quite well. And you can just see how it exploded out of nowhere. And then, give me 1 second, I'm sorry. There we go, sorry. The baby is crying for her daddy. And then I said to you guys, hey, a year ago, when I was back in November, and now I said, hey, watch gold. And then the same thing happens. So it's not that I am that amazing of a stock picker. We're going to talk about why these things happen seemingly like clockwork throughout the year. And then they had me back May of this year. I said, hey, watch these stocks. Then the same thing happens. 3 months ago, I said, watch these stocks, which 4 months ago. And it's just insane. It's a lot of fun. Has anybody been here before to watch some of those trade ideas? You can go ahead and type in if you have. SP, you have. You guys can also type in where you're listening from. I am from the Allentown, Pennsylvania area. Oh yeah, I thought so. That was the same SP. Awesome. Yeah, in the Bay Area. Fantastic. Mark, you're over there in Jersey? Okay. So Mark, I'm in the Allentown, Pennsylvania area, so I am not far from you guys at all. Well, I should say from Mark. Other side of the country for SP. Faith, you're in Cali, Palm Springs. Awesome. Well, welcome. Hey guys, we're going to kick off in about 2-3 more minutes. Then we're going to get started. We're going to have some fun. We're going to talk about the hottest trade ideas for the weeks ahead. Oh, so DP, I can't see your first name. DP says you do a lot of work with Air Products. Yeah, Air Products has one of their factories right by the airport. So I'm right near, DP, you might know this then. So I used to live in Catasauqua, which is right by the Allentown airport. Now I grew up north of there. I grew up near Beltsville Lake, up at the bottom of the Poconos. So I met my wife. We moved down. Well, she was in Catasauqua. I moved down there, but now we just moved in October to Breiningsville. So you probably know all those places. Hey, Jeremy, in Washington. Tony down there in Kentucky, near Hubert. Fantastic. The last time I met up with Hubert and Jeanette was in Vegas in November. We usually meet up once or twice a year, just depending on what's going on. Now this year, not so much. It's the year of, is it over yet? But for trading, oh my goodness, it's been amazing. It's been a heck of a year. All right, guys, I have 6:59. It's about to go to 7 o'clock Eastern. Yes, we are live on Tuesday the 22nd, 3 days before ho 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 time. Can I make my screen and slides a little wider? Hey there, Bruce. How are you? Bruce, because I'm using just one monitor, I need to keep I can do a little bit. I need to keep a patch open so I can see what you guys are asking about and talking about. All right. So, G, you are from the UK. Cool. A big warm welcome to you. All right, guys, I now have top of the hour. I say we get started. I'm thrilled to be back. So let me just hit a couple buttons here and we will get ready. All right, hey gang, my name is Ron Haight. It is great to be back with you guys. It's just been a little bit since I've been here. Hope you guys are doing fantastic. Happy holidays. Happy Hanukkah, Merry Christmas, Happy Kwanzaa, Happy New Year. As always, when you see me in a presentation, everything is for educational purposes only. Nothing is advice to buy or sell. I'm not a licensed financial advisor. I cannot tell you what to do. Past performance is no guarantee of future performance. Trading is risky, and you could lose all your money and then some if you don't know what you're doing. So, hey, paper trading is free. You can practice all you want with fake money. Now, disclaimer is done. I am back. I am back for another event. Jeanette asked me to come back because the trade ideas I keep giving you, basically, they just keep working. So what we're going to do, which is the same thing I did a year ago, and before then, I think this is the sixth series of events that I am back for. I'm going to unveil the top stocks for the new year. Even starting now, we're going to do both. I'm going to show you why it happens and give you a bunch of free ideas. Great trade ideas. Now, I love starting out the presentation asking this one question. What is the number one challenge we face as traders walking into every trading day? Now, the holidays are coming up. We're going to have maybe some free time on our hands. And I have a feeling I know what we're going to be doing. Besides having our favorite beverage and maybe eating a lot, we're going to look for stocks that can make us money, hopefully. That's the game plan. And we're going to take time maybe away from our families, time away from the dog, the cat, the golf, fishing, whatever it might be. And we're going to hunker down and we're going to try to do the best research we can. But you know what? At the end of the day, it's still 50-50, eeny, meeny, miny, mo, which way is it going to go? And I can change that. That's a pretty bold statement, but we can. I can show you stocks that have incredible track records, just like I did for you guys back in August, just like I did for you back in November. We're going to do it right now. These stocks I'm about to show you have 80, 90+% track records. And I'm going to give you my most favorite ones, holding nothing back. And I'm going to show you two that have perfect track records when they enter specific windows of time, meaning these little turkeys never lost. So let's do it. We go to financial and we type in any stock symbol. Let's type in SPY, which is just the S&P 500 ETF. We type it in, we're going to click two buttons and we're going to see them. That's it, 2 clicks of a mouse and we're there. We're going to hit screen and then we're going to click on seasonality. That's it. Now at this point, I've asked the software to find stocks that are going to rise at least 5% over the next 13 weeks. And man, they do it 70% of the time or more throughout their entire publicly traded history. We slide down and all of a sudden, we're looking at the hottest stocks for the weeks ahead, period. Okay, webinar's over. I'm not kidding. I'm like, seriously. So if I were to draw, I'm going to circle those 5 columns in yellow. Those 5 columns that you're seeing consist of one 4-letter word, data. So if you're an engineer, and if you are, you can say it. I'm an engineer. You could say that. If you love facts, if you're a numbers person, if you're a scientist, someone who's like, listen, opinion's one thing, but show me the facts. Show me the proof. Proof is what separates baloney from the real deal. What you're looking at, guys, all it is data. We build financial, we buy our data from CBOE, Morningstar, Y charts. We bring in all this data and we just crunch it in a matter of a second and we display these stocks. So when I say to you, and I'll get my little mouse out here, hey, this stock typically, let's get blue. This stock, Netflix, it goes up by 25%, 72% of the time. Or if I come down here and say, hey, Domino's pizza, who doesn't like pizza, goes up by 18%, 93% of the time. I am not telling you this. I'm just reading the screen. These are the stocks telling you and me what they have done historically this time of year over the next 3 months. So does that mean Domino's goes up by 18% on average? Frankly, 9 out of 10 years, more than 9 out of 10 years? Yep, that's what it means. That's nearly a perfect track record. It gets better. I'll show you one that is. Now, the question comes in, so if this is just data and these stocks do this seemingly at the same time every year, why? Why would this happen? And it's actually a really simple answer. And the answer is big dollar bills, big money. Now, the US market is closed as we do this webinar, but even if the market was open and we all got together and bought, 1,000 shares of Netflix each, 1,000 shares of Domino's each, we are so insignificant to the overall volume in the market. We may not even make one block trade combined on the CNBC ticker. That's how irrelevant we are. So for a stock to say it has 9 times out of 10, 9 years out of 10, 7 years out of 10, 8 years out of 10, for it to go higher, there needs to be big volume repetitively doing it in that window of time. And what's really neat is it creates this ebb and flow effect. We as retail traders are going to know when to get in, bingo, and we're going to know when to get out, check, before the big money leaves. Because when they start buying, they can't buy all in one day. They're going to cause the stocks to spike. And they can't sell all in one day. If they're that big of size, they're going to cause the stock to crash. They're going to get a worse fill. So they got to do it over days, and they got to get out over days. And this creates the sweet spot. And that's what we want to be doing. Now, let me go ahead and erase all these drawings, go back and get my highlighter. And I said to you, those 5 columns, it's just one 4-letter word, data, just raw data. Now you could say, Ron, this is great. I just want to go look at those, because if these have those kind of massive moves, I mean, just look at that. Those are the average increases in the next 3 months. So when you look at Netflix and you see 25%, holy guacamole, that's just the average. The average, some years it could have been 50%, which it was. Some years it could be 5 or 10%, which it was. That's just the average. But here's the thing. How do we know that these stocks are going to go up this year too? Because, hey, they're not perfect track records. That's clear. I mean, sure, Domino's is pretty close, but it's not perfect. All right, so here's the thing, and this is really important. Past performance cannot guarantee future performance. Nothing says these turkeys are going to go higher this year. So what could we do to help improve our chances? Just because they've done it in the past, what could we add to this equation to give ourselves, hopefully, a better chance to win? And that is where we can come in and use our algorithm, which is right over here. So I'm going to come in and I'm going to circle that red. Pen. There we go. This one right here. Now, when we add stock score, That is an algorithm we've created. It takes into account F for fundamentals. That could be things like earnings reports, balance sheet. C for chart, which is technical analysis. That could be things like candlestick patterns, moving averages, things like that. We take into account S for sentiment. That could be things like analyst upgrades, downgrades, open interest in the options market. And then we take the fourth piece, which is the seasonality, those 5 columns in yellow. We put all 4 of those together and create a buy or a sell. And this is how we cull the herd, and we only look at the rosiest, the best looking stocks. Therefore, when you look at LNG, you see it's the #1 performing stock by percent increase, 29%. It does so 80% of the time. But guess what? It's on a sell. Look at the bottom of your screen. There's text. It goes up 85% of the time. I mean, that's pretty gosh darn good, right? It too is on a sell. So we're going to eliminate any stocks that, yeah, they might be seasonally bullish, but there's something wrong under the hood. This is what we do. We're going to come over here. I'm going to erase all these drawings. I'm going to slide up, and we can click advanced filtering. We are going to look for not only these seasonally bullish stocks that rise at least 5% over the next 13 weeks, 70% of the time. We're going to slide this puppy over to buys. Hey, financial, show me the top seasonal stocks for the next 13 weeks, but only the ones that are the best of the best. Yeah, we can do that. We make it a buy, we slide down. All of a sudden, LNG is gone, and so is TEX. Now, guys, you are looking at the hottest, proven, based on fact stocks for the weeks ahead. We can sort by percent increase. We could sort by historical percent of increase. And then we're going to see that DPZ is numero uno. We're going to see gold is 87%. The GLD, we're actually going to be looking at both of those today, both top 2 for historical increase. And then we're also going to look at numero uno of percent increase, which is Netflix. Okay, so now we know some information. We know that these are the hot stocks based on fact, proof. We know that also our algorithm is rating them a buy, which means the fundamentals, the technicals, sentiment also looks good. Check, check, check. We know why it happens, the big money. So what's next? How do we know which one to pick? Now you can just go randomly in here and pick one. You could pick the one at the top. I would say this. One of the best things I've ever learned is trade the same stocks over and over again. Just follow them because you develop a little bit of familiarity with them. You sort of know what they do when they do it, and you never forget about them. So I'm going to pick Netflix. Let's just go for #1. At this point, if we scroll up, we're going to click search, and we're going to click seasonality. And I will answer all your questions at the very end. Don't worry. I'll make sure I hit every single one. Now, once we hit search seasonality, we can go stock by stock. And this is really interesting. If we look at the S&P, which is the S&P 500 ETF, we see that throughout the year. Well, actually, let me tell you what these are. So here's the historical data. This is the line chart. That's just what the S&P has done. We can see the Corona crash. Then we have the COVID Corona rally. And this is the future projected price. This is the future probabilistic price based on what the S&P does. And there aren't real big moves here. It's sort of up a little, down a little. We can go week by week and see how the S&P performs. And even if we go out 3 months, which think about it, January, February, March, even if we go out into March, guys, the S&P historically only rises about 2%, 62% of the time. That's not exactly feeling super good about things. Well, about 62% of the time it goes higher. A whopping 2% in 14 weeks. Watch what happens when we type in Netflix. I mean, you sort of already know. We scoot down here. Holy cow. Look what Netflix, look at this little dotted line. It's literally a treasure map. If we go week by week by week, all of a sudden you start seeing that 77%. Into March 8th, which is 11 weeks, Netflix goes to 83% historical accuracy. Let's keep going. Let's go into April. And we keep still 77. Whoa, if we go into May, right before Labor Day, or before Memorial Day here in the US, 88% of the time it goes higher. And then you start looking at 38% in 22 weeks. If we come over here to February and March, I mean, that's 25% in 11 weeks. These are extraordinary numbers. When you see a stock moving 10%, those options often can double in value or more. These are some serious moves, and we can see that explosion that happens. Now, some of you guys, rightfully so, have said, what about COVID? I'm going to show you stocks that don't even care about COVID, including Domino's, including Disney. You're just going to shake your head and say, wait a minute, not even a reaction to a virus that the country has never seen. Unprecedented. And yet this seasonality still works in the face of that. Remember, your and my opinions are irrelevant. It's the big money that drives the market, not you and me. So if the big money is going to partake, they're going to go. And if they don't, they're not going to go. I'm going to show you how to spot it on a chart. And you're just going to say, oh my gosh, it truly can't be this easy. And I'm going to say, proof's in the pudding. Yeah, it is. It really is that easy to spot. Okay, so this little dotted line just tells us what the stock historically does. Now, what's really neat is we can literally go week by week. And right now it's what, December 22nd? If I take you out right to the beginning of January, read what that says. Netflix is projected to rise by 0.06%. We're not even talking about 0.1%. It's 0.06 and it's 50%. Well, crap, you and I can do that. We can play eeny, meeny, miny, mo, pin the tail on the donkey. We don't need anybody else's help. If I scroll down, look, Netflix is publicly traded 18 years. Over 18 years, it does squat for 2 weeks. And then the explosion happens. I wonder what causes that explosion. I'll show you that. So now that we know that Netflix goes higher, let's go to Thinkorswim. And I actually want to start with SPY, and this is really going to be telling. So I'm going to scroll back, and I want to show you Netflix on a chart. This is a daily chart using Thinkorswim. Now, you guys can use any brokerage firm you want. It doesn't matter. You can use Interactive Brokers, TradeStation, Tastyworks, Schwab, Fidelity, doesn't matter. Here's the S&P 4 years ago. Now, someone always asks, why are we doing 4 years ago? Well, let's face it. If I tell you that this seasonality crap works, I better be able to show you proof in spades. Now, you've already seen the data. The data is the proof, but sometimes people need to actually see it to believe it. So here's the S&P. Now, this is not political. I don't care if you like the current president or hate him. Don't care. What we all do care about is making money. That's what we want. So the market was tanking 4 years ago before he was elected. Then that night, the futures surged and the stock market went on the most bullish run post-presidency we've ever seen, ever. That's how crazy bullish it was. Now, the S&P 500 is 500 companies. They're not equally weighted, but it's a broad market indicator. Basically, the theory goes 8 out of 10 stocks follow the S&P. Now, that's important. So if the whole market is soaring higher, and not just soaring, guys, the market went from 208 to 228. That's 10% in a month and a half, from mid-November to mid-December. Month and a half, a 10% move, never seen before. So let's just assume you and I don't know about seasonality at this point. So we're talking and we're like, maybe we're in Vegas at the money show. And we're just like, hey, what would be a good stock? And we say, maybe Netflix would be a good stock. Okay, whole market goes nuts. So you decide to pick Netflix. I'm going to take you back 4 years. And maybe this was you, and if it was, I am sorry. I'm opening a wound. Right there on your center of your screen was the election. While the broad market, 8 out of 10 stocks are roaring higher, you pick Netflix, and it goes from about 125 immediately down to about 110. Let me say this again. The whole market is surging. You manage to find one of those stocks that didn't go higher. Do you know how hard that is? But yet it happens to us all the time. You just lost 10% of your money in about 5 days. You're so angry, right? It's like, well, how do I do this? Why am I that good? If I just do the opposite, I would make money. I get it. I've been there, done that. And then eventually the stock goes back up. And then it goes sideways into the end of the year. What do you do at the end of the year? Hey, we're here. Next week's the end of the year. We look at our portfolios and we all have losers. And we say, dang it, the whole market just went up more than it's ever done in its history in a month and a half post-election. I managed to pick the one stock that didn't go up. At least I got my money back. I'm just going to sell it. And then you're going to be mad, mad at yourself, do better, study harder. Guys, what if you pick the right stock? You so picked the right stock to trade. You just got the time wrong. Remember how I told you at Financial? All we're doing is showing you proof. That's all we're doing. I cannot stress this enough. I'm just telling you I'm showing you what the stock does. For 2 weeks, that stock doesn't do diddly. When that 2-week period is over, this thing gets shot out of a cannon and it's the #1 performing stock. Look at that. Now, if you knew that, you would have said, I'm not buying Netflix post-election. I'm going to go find something else. And then watch. I zoom out. Here is where we were at December 30th. The very first trading day of January, all of a sudden the volume rises. All of a sudden the stock goes up. And we go from what? Around 127 to 134. Post earnings, we're up at 142. We pull back, and then all of a sudden we're up at 145. The stock goes from in the 120s to the 140s. You had about an $18 to $20 move all over the course of about a month and a week, 2 weeks, month and a half. Like clockwork. How could we know that this pop was going to come? I would like to say Financial said it, but the stock is saying it. The stock is literally sitting on your ear saying, dude, dudettes, look at what I do. And then it goes nuts. Okay, well, that was just that year. I mean, this isn't going to happen like every year. That would be really silly. The market's not supposed to be like that. We're told the market is random. Well, whenever Jeanette and Hubert bring me in, I keep showing you the market is not as random as we've all been told. There are absolute biases. Do you see that little red circle? That is an earnings report. Look how the stock goes up. Okay, earnings are supposed to be 50-50. Really? Really? Does that look to you, when that earnings report comes out in January, that it's a 50-50 crapshoot? I would say, no, it's a 72% crapshoot, the bulls win. It's a 77%. It's an 83%, the bulls win. All of a sudden, earnings reports are no longer, quote, 50-50, what's going to happen. Based on history, now we don't know what's going to happen this January, but based on history, does that look like a crapshoot to you? The data doesn't lie. The big money does something to Netflix, and boy, do they push it in a big way. Okay, so that was this year. Let's scoot along and go to the next year. So now he's in office for 1 year. We're going to slide over, and I'm going to show you right there. Okay, now this is 2017. Here's the earnings report in October, and then here's November, and what happens? The stock slowly drifts down. It goes from 200 to 190 at the end of the year. So now you're thinking, I just lost 5% of my money again trading Netflix in Q4. This is ridiculous. Remember, the stock market, quote, has this holiday rally and it goes higher. November's been amazing. December's been really good too. So if you would have bought Netflix the second time, you would have lost 5%. You end up selling the stock. Crap, this bites. Look what happens. Look what happens the moment we come to January. Pop. First trading day of January. We go from around 200 a share. Pre-earnings, we're at 220. Does 10% sound good in 3 weeks if you only trade stocks? The 10% move is nearly, or usually often, 100% option return. Post earnings, you're at 280. Then you pull back, and then you're up in the 320s, the 330s. Guys, in 2.5 months, this stock went from $200 to $330. Oh my God, that option was up over 500% at that time. Is that nuts or what? How could we know this was likely to happen? I mean, just look back to your left. La, 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 right? Blah, blah, blah. This was like watching paint dry. Why is nothing happening? And then look how the volume comes in, which is a reflection of more money coming in, the bigger money coming in. They were buying this thing. Heck, wait, it's after 7, right? I can say it. Hell, they were even buying it the day before earnings, and it pops. It's almost like they knew what they were going to do before they did it. Well, the facts don't lie. Now, I haven't shown you this, but I'm going to do it right now. If we scroll up at financial, not only do we see the historical track record for this stock, knowing that it does squat for 2 more weeks, and then it just gets shot out of a cannon. You can go to financial and say, this is going to be one word so I don't get sued by Amazon. Hey, financial Alexa, can you please tell me the best time of the entire year to be bullish on Netflix? Yeah, we can do that too. One click of a mouse. You go up there and you click best period. It's going to pop down. Move your mouse and read it. Read it and enjoy. Read that green text. Netflix has risen by an average of 30.50% during this 13-week period, and the little sucker is never lost. Not even this year with COVID. Not one time is it lost. The average gain was a 30% stock move. Guys, if you trade options, you know this. I'm just going to make sure you know a 30% stock move in 13 weeks, which is 3 months. It's not, did the option make 100%? It's how many 100% did that option go up? And this is how I can, when I send Hubert and Jeanette the data, I just use Thinkorswim's data and I do the calculations. When I was with you guys before and I told you about Network Appliance and F5 and Disney, and these stocks are up 200, 300, 400%, now you see why. Because of these incredible historical moves. Okay, well, let's go back to Netflix on Thinkorswim. Now I'm going to tell you a little secret here. You see this orange line? That orange line is called the 50-day SMA. It's a 50-day moving average, but it's referred to in the investment community, and this is key, it's referred to as the institutional moving average. Meaning, when stocks get above that line, they are viewed as institutionally bullish. When stocks are below the orange line, they're viewed as institutionally not bullish or bearish. Do you see how that volume begins to surge the moment we cross that line in the sand, which is their moving average? Now, I don't give it that name, the institutional moving average. The investment community does. So I was taught that a long time ago, 20 years ago, when I got on the markets. The moment we go from below this orange line in the seasonal window, we pop the orange line. There's the explosion. One of the emails I sent to Jeanette for her to send out to you guys, I said, call it a grab the popcorn trade. Because what we do in December is we literally just sit here and wait and wait and wait. And we just like rub our hands together. We get all excited as January 1st comes. And then you wait for the whites of their eyes. We trust but verify. Just because Netflix has never lost in that window, maybe this is the year it ain't gonna work. So what can we do to potentially help our chances? Wait for the stock to pop above its own the institutional line. There it goes. Oh, look at that. There goes the volume. And then that's off to the races. What is the trailing stop? You probably want to know that. You can use whatever you want, of course. I would say this, use my red line. The red line is the 20-day EMA. It's a 20-day exponential moving average. It works really good at trend trading, and then you just stop yourself out. If the stock keeps running, it's going to keep its butt above that moving average. So you would have gotten in Netflix here on January 2nd, and then you wouldn't have gotten out till what, March 22nd? Better than a sharp stick in the eye. Let's keep moving. Let's go look at the next year. Now, this is interesting because I like this one. I love Vegas. I think one of you guys said you were in Vegas. So usually I'll go there once or twice a year just for vacation, besides the money shows and the traders expos. And I went over Christmas 2 years ago. and I was having dinner with a friend of mine. He also trades, and we were talking about how unusual it was for the market to tank in December. And we talked about seasonality. And I said, well, you know, if the stocks are selling off, we can go bearish seasonal stocks. We don't have to do bullish, but generally the market is more bullish than bearish. And we were like, man, you know, this December really stinks for if you're a bull. If the market were to turn, what would be the one stock you would go to come January 1st? I'm like, Netflix. It's the number one. It's proven number one. Not that I say it, the data says it. So what would we wait for? Can you guys tell me what we would wait for? We wait for the stock to enter the seasonally bullish window, which we know is January. That first week of January is when it starts to go. We wait for the stock to get above what? So we wait for January. We wait for it to cross the orange line, the institutional line. Ready? Oh, ready? Market bottoms in December 2 years ago. We pop the orange line. The stock's at what, 298? Within 8 days, 8 trading days, we go from 298 to 355. 57 points in a straight line. If you're a stock trader, you're ecstatic. That's a what, 15% gain as an options trader? Yeah, triple digit return. Now this time we have earnings, it pulls back, and then it goes right back up. Notice what we never close below, the red line, and you're stopped out in March. All right, let's go to the next one. Now what do we do over here? Now right where my mouse is November, and then over here is December. In this case, the stock started running a little bit early, which is somewhat unusual, but what do we know to do? Wait for January. I'm going to slide over. Here's January 1st. The moment we get to January, it's game on. The stock's around what, 329? We get up to 345. We have a one-day pullback. We breach the red line, so we can stop out. That was a really short trade. Earnings are out. It goes right back up. Stock's at 349. And before you know it, you're at what? 390, 388, 380. Yeah, 390, almost 391. This is an example of one that wasn't exactly perfect, and yet it still explodes, and yet it's still a winner, which is why it's never lost over that whole time frame. Let's go to the next one. Now here we are. This is the here and now. Do you see how Netflix is starting to rise? And you would say, oh wait, maybe it's going early. There's the orange line. We know that net, it does nothing for 2 more weeks. So what we do on this Netflix trade is we don't do a darn thing for 2 weeks. I want you to practice in a paper account. The moment we hit January 1, if we're above that orange line, it is game on. Red line's the trailing stop. If Netflix rolls over and comes back down, because look, it's still in a big old trading range, we're not in the window. We don't want to be premature here and jump on board. We want to wait. So follow this one on paper. I've just shown you 16 into 17, 17, 18. Yeah, I've shown you 3 years. 2 of them have been amazing, and one was so-so. And yet it still had almost a 10% move. Not bad. All right, so now you know how to do Netflix. Does anybody remember when I was with you guys in August? And I said to you, we did the same thing. We went screen, seasonality, and we did the exact same search, and I scrolled down and I said, hey, look at all these stocks. And when we were in August, I could look out nearly 3 months, 2.5 months ahead and tell you there was one stock to watch come November 1st. And I told you guys that there are 2 massive sweet spots of the entire year. Now, seasonality works all year long, but there are 2 mother lode times. The mother lode is November 1, goes to December 15th, and then it kicks off again January 1st. And that one stock was, remember what it was for November? It rhymes with Mouse House. That stock was Disney. We're going to go search. We're going to go seasonality. and we're going to type in Disney. We found Disney the same way we just found Netflix. And I said to you guys, I want you to get ready for Disney. And I gave you guys a task. And at that time, when Jeanette had me in August, I said, I want you to go to your families over the weekend and ask them when they think the best time to own Walt Disney is. And they're like, well, it's COVID. That's not really fair. I said, okay. It's the summer. We don't know how Disney's going to do in November. Ask them anyway. Tell them to forget about COVID. When do you think the best time is for Disney? And I've done this to my family, so I can't do it to them anymore. And I would say 9 out of 10 of them always say the summer. Well, that's when the theme parks are typically full. The kids are, on every ride or waiting in lines. The parents are broke. They can't wait to come home. Let me show you something. What you see on your screen, Disney is publicly traded 48 years. 48 years. That is older than me. I'm 47 and a third. There is a clear ebb and flow over Disney. Now, if this is the first time you're ever seeing seasonality, you might think, well, wait a minute. Yeah. If a stock's been publicly traded 48 years, there was Democratic presidents, Republican presidents, there have been wars, there have been recessions, the banking fiasco back in 08, 09. The value of the dollar is different. The trade agreements were different, right? All these things. Disney didn't have Pixar. They didn't have Star Wars, right? They didn't have Toy Story 20, 30 years ago. They didn't have these things. So you would think maybe there's no bias, and it's just the opposite. The big money, they laugh at us. My business partner worked at a hedge fund. The hedge fund is so large, I'm not saying this to impress you, it's to make a point. We had to sign a non-disclosure agreement that I cannot reveal the fund's name or the head of the fund, because if I said first or last name, you would know them. And they are absolutely aware of what I'm showing you, but they can't stop us from showing it because it's just data. They know that when they make a buy or a sell, that there's going to be footprints. And Disney is one of the best examples, which is why I've done this for 4 straight years as the #1 stock for November. It's literally money almost every year. The big money makes fun of us because they know we're retail traders, and sometimes we just don't make the best decision. And when you think that the summer is the best time of the year to own Disney, does it make sense? Their earnings reports are probably going to be really, really good. Look what they do to you. They're selling to us. They're selling us. They're calling us jokers. They make fun of us. Oh, we're the fish, we're the guppies. We don't count. And then when the kids are back in school and maybe the theme parks aren't as busy, then what happens? That's when they buy. Look at that November timeline. That's when the stock goes up. And then there's often a continuation even through spring. My point to you is it is the exact opposite of what the average person would think. We're the lemmings. They're selling to us over the summer when we think it's a good time to buy, and they flip it and they start buying again in the fall. So let me erase this, get my little pointer back, and let me take you back to Walt Disney. I'm going to take you back 4 years. I'm going to do this faster though. So we brought Financial Public back in 2016 so people could use our software. And look, here's May. There's the earnings report. The May earnings report usually ends up with a dip. Then there's the August earnings report, ends with a dip. Wait a minute. So the whole summer it goes down and there's 2 earnings reports, one in spring, one in the dead of summer. Yep. And what does the big money do? They certainly don't buy it. How do we know that? We go to financial and we plot this on a graph of what the stock price does. Over 48 years, they dump Disney. Now, it's not a horrific down move, but it's a down move. It certainly isn't up. Okay. And I'll never forget, because when we brought financial out in the fall of 2016, everybody said, what's your #1 stock? I'm like, well, based on the data, Disney's one of the best. It's one of the most seasonal stocks. You nearly have 50 years. Well, at that time it was 44 years of data. What are we going to watch for? We're going to watch for Disney to enter its seasonally bullish window. which we know the bottom is October, and then it starts going up November. So we know November is the beginning. And then what do we wait for? We wait for the stock to pop the institutional line, the orange line. So this is how we avoid the trouble. What if Disney would have kept going down? We never would have traded Disney. The only way we trade Disney is if we cross that orange line to help us signify that it looks like the big money's coming in. You ready? Oh, come on, Thinkorswim. I love Thinkorswim's charts, but geez, always, sometimes they're really wonky. Here we go. This is where we were. Over here on the left, there is November. Look what happens. I'm going to zoom in. Again, look what happens the moment we start getting above the orange line. Pop goes the weasel. Let's say, what, 95? All the way up into the teens. Well, not quite the teens, 112. What do we see with the volume? Remember I said the big fish? It's sort of like, if you like fishing, I like to go fishing. You know, if you're in the northwest part of the US, it's the salmon run. If you're in New York, it's the salmon run. If you're on the east coast of the US, saltwater fishing, it's the blues. If you love the Discovery Channel or Animal Planet, it's the Serengeti with the wildebeests. It's when the herd runs. The volume is the herd. That is the buying. Look how the volume goes bonkers. Now, this is where it gets crazier. That red circle is the earnings report. Now, Disney reports after the market closes. So on that day, Disney closed right around 95 bucks. After market, they come out with earnings. The next day, it gaps higher. The news was magically good, pun intended. So there was earnings. Wait a minute. There's a big honking spike in volume, and there was a spike the day before. It's almost like they knew what they were going to do before they did it, huh? The volume doesn't lie. They can't hide. They were buying it in front of the report. Why? I think they had their plan. And then off it goes. Even if you did the trust but verify approach and you said, you know what? I've been burned by earnings too many times. I get that. So we can do trust but verify. We will play it safe. Wait till the day after earnings. Even then, the stock was only at night, what, 98? And it still goes up into the 110, 112. And then whenever it gets below the red line, we stop out. Well, it didn't get below the red line until April. Somebody actually said to me, Ron, are you telling me that if I follow seasonality, I would get in around 95? I'm sorry, 98, get in around 98. And I would hold till it's below here at 112? He goes, that's 4 months. That's insane. 5 months. I'm like, dude, do you not like money? All the stock did was literally go up. Until it closes below the red line, you're in. Follow it on paper. You're going to be blown away. Now, this is end of day. So we're doing this webinar tonight in the evening, US. Markets are closed. There are no text alerts. There is nothing to watch all day. You go about your daily business. All we do is we come home from work, feed the family, do what it is, sit our butts in our chair, look at our phone or look at our laptop or iPad. And when that stock gets below the red line, we're out the next day. So we're in when it closes above the orange, when it's in its seasonal window, and then we're out when it gets below the red. Guys, that's the exit plan. These moving averages are on any charting platform you got for free. There's nothing to buy in that case. That's how easy it is. All right, let's zoom out. Let's do another year. Here is the summer. This is May of that same year, now we're in 2017, and then it starts dropping. Wait a minute. That's exactly what the history suggests. Yep, once you get into May, it's pretty much a top, and then it starts dropping, right? So we come over here, and we see it dropping. All of a sudden, the stock gets above the orange line. Someone said to me, and this was a great question, one of our members, Ron, Disney's starting to run in the summer. Maybe it's going to keep going. I said, you're right. It might keep going. I have no idea. I mean, nothing's ever going to be 100% all the time forever. I said, but here's how you got to look at this. You have a choice. Do you want to swim with the money or against it? Do you want to fight the big money or do you want to go with them? And the fact is, the proof says the big money is a net seller. That means any rips may not last. Now that was cool. It was neat that time of year because my wife and I were headed to Australia for about 3 weeks. We were going to be gone the whole month. And I said, when I get back at the end of August, we're going to see how Disney's doing. So Disney started breaking out, gets above the orange line. And by the way, I love technical analysis. This thing looks like it's going to go back up to those highs, right? We're getting a big surge here. Volumes pop in. Here we go. You're like, you're thinking, yeah, but this is how financial could potentially save you. You know that this is not trustworthy. They might pull the rug out from underneath us. And what happens? Up we go. They pull it down. And then there's that darn summer earnings report. And it drops. And then it drops again. If you bought the breakout, you might have been buying it what? 107, 108, 110. A month and a half later, a month later, you're at 96. You just lost 10% of your money. And you're thinking, dang it, they sucked me in. I call this the big money leading the sheep to slaughter, and we're the sheep. They sucked us in, they faked us, and they stole our money. You don't trust Disney with a 10-foot pole over the summer. Not because I say so, because there's 48 dang years telling you do not trust those turkeys. They're net sellers. What do? You wait for November. Okay, let's slide this over. And look what happens. Here is November 6th. Pop, there it goes. Look at the volume. The earnings report was over here. These suckers were buying it a couple days before the report. It's almost like they knew what they were going to do before they did it. There goes Disney, and then you're stopped out on below the red line. Did Disney go up for the whole period of 4 or 5 months? No. So how do we stop ourselves from getting caught if the market were to turn on us? We use the red line. Think about that. 100 to 112, that's a 10% move. You go back up to 112 again, and then again, and then again. I'm sorry, here and then here. Twice you go up there before you're stopped out. 10% stock move, triple digit option move possible. Let's keep going. Then we come over here into that bad December in 2018. Remember that? Well, we know that Disney is a rock star in November. You wait for earnings, you want to trust but verify, and up she goes. You're like, okay, baby, I'm in. The volume's rising. We're above the orange line already. Earnings, we know what these suckers do to Disney. They don't do it every year, but they do it most years. So we get in at 118, let's say. About 5-6 days later, you're at 115. You're below the red line. The whole trade is stopped out. You tell me, this did not work, and we lost $3 a share. Is that horrific? You were never caught in the December crash, the worst December on record. So that red line works really, really well. If things do not keep going with momentum, you just get the heck out, and the big money got scared, and maybe they left too. All right, let's go back. Now let's do this past year. Here is July of last year, pre-COVID. Down goes Disney, tries to rally, down goes Disney. What's the entry for Disney? We wait till November. We wait for it to pop above the orange line. We don't give a crap about the rest of the year. It's November. Look at that. Here's earnings. Magically, pun intended, the day before earnings, Disney pops the orange line. Isn't that funny how the volume just surges by what, double its average? It gets above the orange line. We go from 132. Now, if you waited till after earnings, trust but verify, you were still around 138. Then the Disney Plus news comes out, you're at 148, then you're at 150. Jeanette had me in for you guys a year ago. I pounded on the table and I said, follow this sucker on paper. You are not going to believe it. Okay, well, another big win. I mean, surely Disney's not going to do well in COVID. I mean, theme parks are closed, reduced capacity, they're not making money. Yeah, so much for that. Remember, our opinions are irrelevant. It's what is the big money going to do? We know the windows. We got to see if they're coming to feed. This is this year. Here is September. We drift lower. We come back up in October. We drift lower again. Now, for those of you guys that are technical people, look at that candle on 10/28, the end of October. We just blew through a double bottom. This looked really, really bad. It's enough to shake the tree one last time to get the lemmings to sell. I'm sorry, us retail traders are called the lemmings. They make fun of us. Look at that. That was the exact bottom. It starts drifting up. No touchy yet. No touchy. Day before earnings, they did it again. Pop goes the weasel. You go from 127 to 142 in a day. And how did you know that was likely to happen? You saw the chart. You saw financial. You saw the data. Even if you waited till after earnings and you said, okay, I don't want to get in before earnings. I've been burned too many times. We came back down. Here was earnings. The stock still pops up and it closes that day at 138. Look where Disney is now. In the face of COVID, with theme parks still shut down around the world, and they are not at full capacity. And ESPN is a drag. On 11/13, if you waited for Disney to have earnings, this was a free trade idea I gave you in August. We talked about it. So watch this. I'm going to go to Analyze. I'm going to go to 11/13. And this means you missed part of the move because you were playing it safe. And there's not a darn thing wrong with that. You go out to March, just to give you context. Hang on a second. I want to make sure. We wait till after earnings. Right. It's 11/13 after earnings. So we go to the Analyze tab. We set it to 11. Oh, we're in the wrong year. Hang on. I was going to say something's not right here. 11/13 of this year. A 140 long call. We usually buy options that are about 3 months. If you just want to do stock, that's fine too. This option cost around $9.95. Let's round it off to $10 a share. So if you bought one call option, it cost $1,000. It's a little pricey, not too bad. That was here. And then look what it was. In fact, I'll show you what it is today. We're what? We're up $10 off the high. Look at what it is today. If I take you to Disney, it's $32. Every $1,000 is $3,000. I told you about this in August, and when Jeanette had me back inside November, I told you about it here too. This stock could have literally covered your entire holiday season. And I am not a good stock picker. All we do is we go to financial, and we know when these little suckers do it, and that's the time. And so those of you that were asking, how is Disney going to do in COVID? Now you see, it didn't even matter, did it? How about another one that doesn't care about COVID? Here's Domino's Pizza. I love pizza and my belly will prove it. If I scroll down on Domino's, and this is something I really want to get across to you guys because it's a different way to trade. I love Apple. I love Apple products. 15 years ago was my number one stock. It's still my number one stock. It's incredible. But it has nothing to do about making money throughout the year because we can rotate. We can be very surgical. Why would you want to trade Domino's from, let's say, May to the end of the year? I'm not kidding. From May to December, is there a bias? There's no bias. It basically goes sideways. Where is the bias? Well, you can see it, right? It's here. It's that January to April timeframe. Therefore, whether or not you love pizza or you don't, I bet you love money, which is why you're here. That green circle is when I would be paying attention to Domino's because the data says that's when it gets pushed. And it's being pushed by a lot. So I'm going to do this. I'm going to erase these drawings. I'm going to take my mouse. Now, this is from today, as of last night's close. If I go week by week, 68%, 81%, 87%, this is looking really good. And Domino's is publicly traded 16 years. 93% if I hold it till March. Hey, financial, can you show me the best time of the entire year to own Domino's Pizza? Yeah. For my biggest bang for my buck? Yeah, we can do that. You pop this down. You can ask the software to do any interval you want. I already know it's 13 weeks. Watch this. That 13-week period, 93% of the time it goes higher. If I change to 14 weeks, now it's perfection. It's the perfect pizza. Does that mean it's going to go up this year? Not a chance. But we know what to watch for. 14 years, which by the way includes COVID this year, and it still went higher. I got to see this. Ready for this? When I was with you guys a year ago, Jeanette brings me back at the holidays. Was anybody here a year ago when I was in, when you guys were able to see this? Right now, year over year, I told you to get ready for Domino's pre-COVID. None of us knew what was going to happen. We had no idea that the economy would be, stalled, if you will, the shutdowns. There are two. I'll jump ahead here. We're short on time. There are two magnificent windows on Domino's. January, and then right around the Super Bowl, the big game. 2 windows. Through that window, never lost, not even once. So here we are in January, the stock's below the orange line. So you just wait day by day. It's like, well, geez, Ron said this stock never lost. Well, I'm just reading the data. It never did lose. And now we get into February. Now the airlines are cutting back. They're barring flights from overseas. Then the governors get involved, and all of a sudden you can't even go out to eat. And then look what happens. While the market is tanking, look what Domino's does in the face of a COVID. It pops the orange line, and that meant game on. This earnings report, guys, is in February. I'm going to show you financial. There's February. Has Domino's ever lost in that February report? And the answer is a resounding no, not even with COVID. Now, wouldn't that have been nice to know why the market was getting absolutely taken out behind the woodshed and beaten to death? That there was a stock that seriously never lost? That's what's going to be at the top of your radar with financial. The stock closes above the orange line. And then right before earnings, and after earnings, there we go. Does the stock pull back? It sure does. And then it just keeps on going. So following this, which is what I told you a year ago, you waited for it to get above the orange line. That was February 14th. Let's say you were, which is Valentine's Day. Let's just say you were late by a day and you got in on the 18th. Okay, watch this. I'm going to type in DPZ and we're going to go to February 18th of this year. Again, this is a free trade idea I gave you a year ago. It's the same ones every year. That's the beauty of this. You just keep riding the winners. That's the whole point. Ride the ones that keep winning. So in February, we would have gone out to June. You're seeing that if you trade options, they're usually about 100 days or so. Check this out. We could have used May, of course, but let's just use June. Just for argument's sake, let's say we did a 300 for $18.50. We're not even going to split the bid ask. We're just going to pay it. $18.50. 2 days later was the earnings report. It's never lost. That $18 is now $77. So what does that mean? $1,800 was the cost of one options contract. It's worth $7,700 in the face of COVID. If you did 10 contracts, 10 grand became, 77 grand. Now you're talking about a car. It's ridiculous. And how could I tell you that I want you to watch that stock? I have nothing to do with it. I go to financial and I say, oh my God, that is the window. This is the mother of all windows. I had people emailing me and I didn't verify it. They were just sending emails saying, I've never seen an option go up that much so fast. And they're like, thank you, Ron, you're awesome. I'm like, I'm not awesome. We just go to the software and it just shows it. It's just incredible. Now, here's another one. Here's gold. GLD, because this is one for here and now. You're going to want to watch this puppy every day between now and year end. So here is gold, and this is our last one we're going to do. Gold basically doesn't have much of a bias once you get into like March through December. In fact, actually, at the very end of December, November, December, there's actually a dip. You can see it. The line actually goes down a little bit. So that means there's only one window, even though I'm a huge gold bull, that I would want to look to have the odds on my side. And that is right now, the end of December into the early part of February. If I remove these drawings and I take my mouse over the next week, gold only has a slight bias. Once we get through next week, then it starts going up into the 70s, 80s. We get as high as 87%. Then again, you're going to do this. Hey, financial, can you show me the best time to own gold for the whole year when the big money typically pushes it? Come up here. Come on, gold. You come up here, you type in GLD, and then click best period. And I can tell you right now that if we move this to like 8 or 9 weeks, the best 8-week period for gold, 87% of the time it goes higher. The best 9-week period for gold, same thing, 87% historical move. Now you know when you want to follow gold. So I was here a year ago, and this is crazy, but here is GLD. I'm going to do this really fast just to speed this up. I'm going to take you back to 2013 into 2014. You ready? Remember how I said Q4 is bad for gold? Look at this. Here's September. There's October. Crash. The moment gold crosses the orange line in January, we go from what, 120 straight up to 130. That's about a 10% move, triple digit option win possible. Next year, look how we have, actually it sells off over the summer. You have one more dip. In December, pops the orange line. There we go again. We come over here. Look at this horrific sell-off. October, November, December, pop the orange line. 104, 120s, almost a 15% move. We're 3 for 3. Look at this one. This is 2016. Look at it crash. They're shaking the lemmings from the tree. At this point, it looks like you're going all the way down there. And it turns on a dime. It crosses the orange line, 113, 120. Over here, there's another December sell-off. We pop the orange line, 121, nearly 130. Come over here. And this is where I was with you a year ago. In this, literally the same time, and I said to you, come on, Thinkorswim. And I said to you, right here is what, December, we're at the 22nd. So here is year over year on gold, literally to the day. It crosses the orange line. We go from what, about 140 straight up into 148. If I take an option from December 20th of last year, year over year, watch this. Some of these options are more pricey than others. This one certainly isn't. If I take you back to December 2019 on the 20th, and we'll do a March option, it only costs $276. I told you about it last year. And then what? By the time we get to February 6th, which is not even the peak, or January 6th, now that option is worth $845. $276, $845. Guess which stock we're going to watch this year? Gold is 7 for 7. The last 7 straight years, it's gone up once we get to January. So here we sit. Here is the orange line. Now it popped up early 4 days ago. And I tell you guys, get ready for right around Christmas. We are now getting right around Christmas. So here's what we're going to do. We are going to watch this sucker like a hawk. Maybe it does it tomorrow. Maybe it does it the day after Christmas. Maybe it does it New Year's Eve. We don't care. But once January 1st comes, this sucker pops the orange line, it's game on. I just showed you the exact same method for the past 7 years. Winner, 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 winner. Chicken dinner. And how do we know? Go to financial, type it in, and you're like, oh my God. If there's a stock you're going to watch now, it's gold. January 1st, Netflix. We didn't even have time to do Adobe. I threw in Domino's, and then I showed you Disney. This is why Jeanette and Hubert keep bringing me back. I'm showing you fact-based analysis. Now you know which are the best performers. So here's what I'm going to do. Get you guys out of here. I'm going to show you 3 testimonials. Jan recommends this to her friends. The only way you tell a friend about, and you know this as being a trader, we're not going to go tell our friends because what if it doesn't work out, right? Well, that's always possible. So for Jan to recommend it to her friends probably tells me she's doing okay because you're not going to recommend crap to your friends. Monica wrote in saying, and there's a lot here, but read the yellow. My trading accuracy has skyrocketed, and I'm no longer wondering why the stock I picked didn't move. Isn't that what we've always run into? Why is it the one that we pick stops going up or goes down after we buy it? We're now going to use what the big money does. We're going to start putting ourselves in hopefully better positions to win. And this was from August, which I was here with you guys in August too. I told you guys back then about MasterCard, Intuit, Salesforce.com. Salesforce.com was a massive winner. And Bob's like, I mean, Intuit alone was crazy good. So Jeanette and Hubert, one final time. I gave you this deal at Black Friday. I'm bringing it back because, well, I love Jeanette and Hubert. They rock. I've known them a long time. They're great people. They said, Ron, can you please give us one more chance at this? So when I say I've never offered it for lower than this price, not even once. You're getting the price from 4 years ago. Call it the COVID bring back. If you go to our website, it's $1,788. Now here's the catch. When I sell 50 of these, I'm going to take the link down. So that's the only catch. You're going to get everything what I've shown you today and a whole lot more. It's not $1,788. It's not $997. It's not $797. It's not even $497. Are you ready? It's only $397. Now, you have to use Jeanette's link. You go to financial.com/thirsty. You have to use that link. If you go to my website, you're going to be stuck at $1,788. You go to that link. Reagan is here with me. Let me just make sure that she has permissions. She is going to be, yes, she does. So she's going to put in a counter. She's going to let me know when we get to number 50. Don't delay. Go grab it. What I show our members is exactly what I show you. And once you join, I'm going to tell you this right now. You ain't going anywhere. If you use this software, you're never leaving, because it should save you from entering a bad trade at the bad time, like buying Disney over the summer. It turns out that's a horrible decision annually, right? Because not only does it go sideways to down, it's costing you time, your capital. Your capital's not being deployed to where it could make money. It's being stuck in a stinker that goes nowhere. So that alone is incredibly valuable. It comes down to $33.08 a month. Now, here are 3 bonuses you guys get. I'm bringing this back for Jeanette and Hubert as well. Number 1, you will get a copy of my own hot stock list. What is this? Well, when I do member webinars, which you'll get access to, I'll talk about that in a minute, I tell you which stocks to watch each month, just because I love this. This is a lot of fun. It's a lot of fun to see people do well. I write down the stocks. Everybody knows about them, but I have them on a doc. So if you want access to that doc, so you also know which are the ones we watch every year, you will get that. Next year, that's a standalone product. You're gonna have to pay more for it. That does not affect you because you're getting the mother of all holiday specials through Jeanette. Next week, before the end of the year, we're gonna have a members only session. I'm gonna tell you again, we're watching Netflix, we're watching Domino's, we're watching Adobe. There's going to be a list of stocks that we wanna watch. I will show you the strike prices, the expiration months, if you trade options. If you trade stocks only, that's cool. I'll go over what the stops would be for you. You're probably going to do like a 5, 8, 10% rule. If you trade credit spreads, oh my Lord. Credit spreads are multi-directional to begin with. You package seasonality, stocks that typically go up or go down throughout the year with a multi-directional trade strategy. It's like a match made in heaven. So I can do all that. I can show you all of that. And you'll get a copy of my entry and exit system, which I have a short video, but it's also in a PDF. So you know exactly what you're doing. You guys can start paper trading tomorrow if you want already. Now, this is the other bonus that you will not find on the order page. So when you go to financial.com/thirsty, you will not see this as an offering. It's just a bonus that I do because it's my company and I love what I do. 4 years ago, I did a live coaching call to show people what to watch for, explain how this works. They loved it so much, they keep asking for it. So 4 years later, between 1 and 2 calls a month, here I am. You will get access to that too, and you won't pay any extra for it. I did one last week. We're going to do one next week right after Christmas, but before New Year's. You will see how to enter and exit the trade. I want you paper trading all of them so you see how they work and how they don't, so you understand this. And then each coaching call goes between 1 and 2.5 hours. You don't have to stay for the whole time. I just like it, so it goes on pretty long. That's worth a ton of value right there. And what do you pay? $33.08 a month. It's only $397. We could easily charge $2,000 for this, $1,500. Super easy because it's that powerful. I want it in as many people's hands as possible. So we're not, call it gorging on price. I truly want this in each one of your hands. It's not an arm and a leg. It's only $397. Now, there are no trials and there's no money back guarantee. I say that right at the beginning. Why is that? It's only $397 a year. It's incredibly affordable. I hope I've done a great job showing you this. There's a reason when you search my name or the company's name, you don't see a lot of crap. We do what we say and we say what we do. It's pretty straightforward. So if you don't think it's for you, that's okay. I think it can truly help you be a better trader. Start trading with more confidence right away. You're going to get login credentials emailed to you instantly. You're going to get the how-to videos sent to you instantly. That'll get you started for the holiday. Next week we get together and we're going to go hammer out trade ideas. Whether you can attend live or not, it doesn't matter. It's probably going to be during the day next week. So that's probably going to work for half of you and the other half it's not. I record it, I send it out to you. Plus, you also get email access if you have any questions. If it is an account question, it goes to my team. If it is a trading question, I am the only one that answers. It comes directly to me. All right. What else do you get? Oh, there's more. We talked about seasonality, search, and screen. That's what we spent the last hour together on. We also have stock score. We didn't even touch on that. You get access to that too. If we come up here and we go search stock score, for example, let me type in the SPY and hit stock score. This is that algorithm I talked to you about. Remember how the COVID, hang on a second, there we go. How the COVID was driving, causing havoc in the markets. There was massive selling. Well, we've created this histogram where green means it's on a buy rating and red it's on a sell rating. The S&P went on its final sell rating on March 6th when it was around 300 on the SPY, which is the S&P ETF. So the SPX was like 3,000 as an equivalent. So we go from 300 on the spiders all the way down to 220. You lost 20% of your capital in 2 weeks. And that was probably gut-wrenching for a lot of people. It would be for me if I was long. Yeah, that doesn't need to happen if you follow our stock score algorithm. It's never going to be perfect, but historically, it's really, really good. How nice would it be to get a sell signal and say, oh, I'm going to get out, and then I'm going to wait to get back in. Even if you got back in on the first buy, it was what, around 250 or so, and then you were back out around 250. It was, I think, about a $3 to $5 a share loss. And the last buy was around 260 something. The S&P's at 360 on the ETF. You're up 100 points. Have you felt good about being up 100 points? Feeling somewhat comfortable? Yeah, well, we were on a buy the whole time. It got close to a sell and never triggered. It gets even better. If you scroll down, we will tell you how our algorithm works with the stock. Now, since the SPY became an ETF, it was a 463% return. That's amazing for all those years. But if you only held the S&P ETF when we rated it a buy and exited, never shorting, just exiting it, it's an 863% return. So what does this tell us? Well, it seems like the algorithm works really, really well on SPY. Doesn't guarantee future, but historically, really good. And you can even see on your screen, it would have been long since what, April? The whole time? Are you kidding me? And then you can do something like Netflix. This one's a little crazy. If we scroll down on Netflix, since Netflix became a publicly traded company, you would have been up about 44,000%. I mean, that's nuts, right? That's awesome. Our algorithm only holding it as a long stock position, no options, just stock. It's 186,000%, 186,000%. Only when it's a buy. When it goes to a sell, we exit the trade. This tells me that historically this works really well, so I'd want to pay attention to the algorithm on Netflix. Does that make sense? Plus, we give you visual buys and sells with the green and the red, buy and sell ratings. All right, so you get that. There's an income screener. Guys, we have a covered call screener. And by the way, Reagan is telling me Oh, hold on a second. I forgot to look. You have to, okay, hang on a second. She is not able to communicate. I was like, she pinged me. I thought she was going to give me an update. I'm going to make you an organizer. Okay, Reagan, now you should be able to see this. So Reagan's going to have to go do a count update. Usually she'll be able to keep up with me and say, hey, you know, 10 people bought, 20 people bought. We're only doing 50. She's going to put that in. Now, you have to use the link on your screen, financial.com/thirsty. Without that link, you're not going to get the deal. That's what's most important. So now it's financial. If you use the true word financial, you don't get we don't own FINANCIL. It's financial. So it's financial.com/thirsty. Okay. Reagan's going to put that link in. And let's see. There it is. Whoa. So Reagan wasn't able to keep up. She already said we're halfway. There's 26 spots. We started with 50. So we're halfway done. This isn't going to take long. All right, if you got questions, you better ask now. When we hit number 50, I'm pulling the link. Now, I get asked, why do you do that? 50 is a lot. I don't want to hold more than 50 because it makes the first member session a little more chaotic. So I do 50 and then I shut it down. What else do you get? There is a covered call screener in financial. There's companies that actually make a product just for screening covered calls. They'll charge 50, 75, $100 a month. Check this out. You go screen and you do covered calls. You can even screen for book value and dividends too as a member. You can screen for companies for covered call premiums, stocks that are in bullish trends, sideways trends, etc. You're getting that thrown in one more time for $33.08 a month, and you get grandfathered in at this rate. You get to keep that $397 every year. You don't pay more for platinum access. That's the, call that the double Jeanette deal. Oh, I forgot to do one thing here. Let me do this right now so I don't forget too long. Let me bring in a pen. You are going to see, there it is. You're going to see a box pop up after you join at $397. And it's going to offer you a second year for $297. Why do I do that? I tried this a while ago and it was a big hit. So when Jeanette invited me back, she goes, I want the best of the best you've ever done, just like we did for Black Friday. I'm giving it to you guys too. So every year you're going to be paying $397. For tonight only, when you join at $397, a pop-up window is going to appear and say, hey, one-time flash, super special. Do you want to take a second year at $297? If you love what you have seen, grab that sucker then, because it's not going to be available tomorrow. It's your only chance to get it as a new member. Every member that comes in pays $397. There are no exceptions. It's my lowest price I've ever offered. But with this mother of all holidays, you can get a second year as a new member for $297 as well. All right, let me erase that, get my little mouse back. So we talked about the covered call screener. We have value investor stocks. If you're a fundamental type person, we have Buffett style fundamentals. Newsletters. We'll actually send you trade ideas by newsletters for covered calls and other seasonal trade ideas. There's also watch lists. Now, what's neat about watch list, if you come in here and you click watch list, you can upload your own watch list into financial, and you can actually come in here and click on the calendar and put a date in and say, man, I've been watching Ron now for 2, 3, 4 years. If there is one stock I'm never going to forget about come November, it is the Mouse House. So put the date in, hit save. We will send you a reminder so you never forget about Disney. We also have alerts built in to tell you when your stocks go on buys and sells via our algorithm. That's automatic. We do that for you right away. You get access for this too. So guys, there's a whole lot here. I didn't even cover everything you get access to, but it's $397. So you can thank Jeanette. You got to go to that page, financial.com/thirsty. TradeThirsty. Now, questions. Jake, can you use any brokerage account? Yes, you can. Does not matter. Mark, will you tell us when to get out of trades via alerts? The answer is no. Here's the deal, guys. I am not an alert service. Everything I have shown you today is what I show our members. There's nothing different. You will not need me after a bit, which is the whole point. So if I get run over by a reindeer this holiday season and I'm gone, you're going to be A-okay. This is end of day, super easy, so practice it on paper to prove it to yourself. No risk, throw it in a paper account. And you watch how these stocks go. Watch what happens when they win, watch what happens when they lose. See how you are comfortable with risk management. Then you can go talk to a financial advisor if you want. Definitely worth it. Watch how these things keep repeating. And that's the reason I get to keep coming back. Because the trade ideas I show you, they just keep winning. And I know a lot of folks say, but the market's up so high, what if it corrects? Hey, what happens if January turns out to be like December from 2 years ago and the whole market crashes? So be it. We'll go find bearish trade ideas. There's bearish seasonal stocks too. And remember, we're not in all the bullish trade ideas unless they cross that orange line. That's what I'm going to teach you how to do. We cross the orange line, game on, and then we follow. So we're going to get stopped out quick if that happens, and then we'll go find some bearish ones. So to me, it doesn't matter which way the market moves. I like bullish moves because it's more fun. But people have been saying the market was going to crash all summer. Then it was going to be the fall. Oh, then it was going to be the election. Then it was going to be COVID for the whole year. Meanwhile, people are petrified, not doing anything, and the big money's still pushing stocks around like they do seemingly all the time. And you saw the proof, and the proof doesn't lie. It's very empowering and it's very confidence building. All right, let me get rid of some of these questions. Hey, SP, great to see you. Ellen and Elaine, nice to see you. Doug, you should be good. You go to financechill.com/thirsty. Let me see where we're at. Reagan says we are now down to, Reagan, the last one that I see says 17. Is that the latest? Just want to make sure, because I'm going to hit these other questions. John, is Disney too late? The way I would teach it, John, yeah. Now you can, paper trading is free. There's no risk. And that's how I want you guys to do this. Because I'm not licensed, I can't tell you to put real money on it. I never would. Put it on paper and see how you do. See why I keep coming back year after year with the same stocks. And then as a majority, because they never all work, they never will. But the majority sure do work year after year, don't they? Pretty awesome. There is a question about, if you're a member, do you see my filters? I think that's from John. John, yes. As a member, I have a snapshot of the filters I use. There's a video on that. And then in next week's webinar, I can show it to you there too. I won't have time to cover all the filters tonight though. Hans, you had a question about how does COVID affect this? Isn't that amazing? COVID didn't stop Domino's. Walt Disney. I mean, I get excited by this, so my voice really goes up and down, but Walt blanking Disney. The theme parks aren't even at full capacity, and yet it still goes higher in the exact window of what they do seemingly every year. You can't make this up. It's like the ultimate, nope, COVID didn't even matter. What if COVID does matter to Domino's this year? Unless it gets above the orange line, we're not going to touch it with a 10-foot pole. It's that simple. We just wait. Gold looks like it might be doing some seesawing. Hans, gold is starting to go. I would just say at this point, just wait until January 1st. Wait, well, first trading, when's the first trading day? I think the first is a Saturday, is that right? No, the first is a Friday. So the first trading day is going to be the 4th this year. So January 4th, I would say. Let's wait till then and follow it on paper. All right. Do we get notifications or do we have to watch charts daily? You're going to need to watch the ones that you're going to go follow each day. I am not going to tell you, hey, go get out of gold today. There's no point in that. That's an alert service, and that's not what I want to do. We adopted a baby girl this year. She's 8 months now, and we are having a blast. I don't even watch the charts all day long. And I own the company, and I do trade. So I may place a trade during the day, but that's one thing. But I do not want to be stuck to my computer. There are no alerts. You're going to come home from work and you're going to say, here, I'll show it to you. Here is Disney. You would have come home from work on 11/6. This is just last month. And you would have said what? Oh my gosh, Disney just closed above the orange line. Holy crap, it's game on. Then the next day the stock gaps up. So if you had limit orders placed, they probably didn't get filled. You would have had to get in at the end of the day on the 6th. So people will ask me, if we see a stock above the orange line in the final 15 minutes of the day, is that good enough? Yeah, it's good enough. But what about everybody that was at work all day? You didn't get in. You would have gotten in here, or you would have waited if you're doing the trust but verify approach, like I said, and the exact example we did, and you would have said, I'm going to wait for earnings. The next day we close, we can get in at the end of the day or upon the open of the next day. Even if you waited another day and got in at the open, it opened at what? 141.57, and now we're at 179. So there was ample time to get in, and that's how easy. Now, when do we get out? When the stock closes below the red line. Until that happens, we ride this pony until that happens. Now, we would always want to close these, if we're using options, before their expiration date. I always like to teach people to get out the day before, so you're not waiting on the day of. Can you set up price alerts? You can. I don't do that. I rarely do it. Guys, I'm not dead serious. This is an end of day system. You do not need another reason to be checking your phone for more ADHD. We have enough of that in our lives with faceplant and the tweet world. All end of day, that's all we do. Zin, how do you get the mega bonus? Anybody that joins tonight, which going to financial.com/thirsty, everybody gets invited to my live webinars, my member sessions, which are 1 to 2 a month. Okay, I'm talking too much. Reagan says we're down to 5. So it's Malcolm, James, Peter, Carrie. Is that Zanita? Looks like Andrew. I can't see who's joining, so Reagan's doing it because I have a full screen share. I don't want to give anybody's personal information away. Doug, you're having, okay, Doug, let me send you this. Oh, here it is. Go to, this is the link you need. Send privately. Okay, Doug, I just sent you an email or a private link. So it's Finan Chill. So it's FINAN and then chill, CHILL.com/thirsty. If you want my email address, you can shoot me an email and we can try to help you after the webinar. But tonight it's only me and Reagan. Dean, what time is the data updated at Financial? It's an end of day product. So we get our data, we buy it. I told you we buy it. And it comes in usually around midnight, 1, 2 a.m. Eastern. It's then crunched. So it's typically all updated by 6 a.m. Eastern every single day. It's often done well before that. We just say 6 a.m. Eastern to be safe. So this is, again, not intraday. This is not day trading. Oh my God, the stock's up $3. If one of you guys join and you send me an email in the middle of the day, and I mean this, and you say, Ron, gold's above the orange line. It's up $3 today. I'm going to reply. Actually, I'm not even going to reply. I'm going to go into our CRM. I'm going to get your home address, and I'm going to send you a Chia Pet because clearly you have too much time on your hands. You need a hobby. So do not email me in the middle of the day saying, oh my God, my stock is up or down, because I don't care, and neither should you. We don't care. We just live our life. I forgot to use my Chia Pet, I think, the last time. You need a Chia Pet. No peaky. Just let the market do what the market's going to do, which also practices really good risk management. I like to teach no more than 5% of a portfolio's value in any one trade, so you don't get gutted if the market turns on a dime via one trade. Now, if you have all bullish trades and the market turns, yeah, you can get hurt. But again, that's why practicing on paper is the real deal. You need to see how this works. And I think you're going to be more than pleasantly surprised. Hey there, hey, Jim B. Are you looking to adding the, oh, I didn't even show you this. Crap. Oh. All right, if anybody is, Reagan, what do we have? Are we down to 3 spots? Is that what you're, we were at 5, you put 2 people. Okay, we have 3 spots. I can't believe I forgot this. We just pushed this live last week. If you guys go to screen and you then go to seasonality, this is something that's been many, many months in the making, and it's finally complete. I will not show you the stocks because this is going to be only for members, but here is the deal. You can come to financial and click on screen, seasonality, and then click on best period. You can now scan the entire market and say, financial, can you show me all of the stocks that are entering their personal best period for the entire year with this start date? That means you could come in here, set your start date to 2 weeks in the future and say, show me everything that first week of January out the next 13 weeks, only stocks that are entering their best period. And we're going to show them to you. You scroll down and you're going to see them. So the members love that. And that was just released. You will also get access to that. Next year, we're going to make that an add-on. We're adding too much to the site for just $3.97. I mean, I love the price point, but it does get a little crazy. That does not affect you because you're getting platinum access, which would include the best period. So you got the best period screen too. I can't believe I didn't mention that earlier. Some people might have hung up. They may not even know they got it. All right, any last questions? If not, I'm going to wrap it up. Because if Reagan tells me they're 2, we've got to be at that number. All right, if you got a question, fire away. At this point, I'm going to say, oh wait, KP. So each month, you can pick the 5 best stocks from the screener. You can do the 5 best every week, every day, or every month, yes. Because the big money typically has an ebb and flow to it, a lot of it's going to go multi-months. So my favorite sweet spot is a 3-month period. Doesn't mean it's going to go up 3 months. Doesn't mean it's going to go up at all. But generally, that's a nice sweet spot because it's going to take a couple days or a couple weeks, quote, for that position to build, if that's what they're going to do. Then they need to have it run for a period in order to make money before they would get out. The big money may do day trading, but when you think about a large fund, think of a major fund out there, Berkshire Hathaway. I'm not saying they do this, but let's just throw that name out there, Berkshire Hathaway, or an Icon, Carl Icahn. You know, typically, I don't know how they precisely trade, only they do. But when you're talking about such large size, they can't buy today on a Tuesday and then sell on a Friday for a win. It's so large that they're going to move the market. They're not going to have any gain. In fact, they may have a loss unless the stock went nuts. And that's what creates this seasonality effect, not just me buying my 100 shares or 1,000 shares. All right, Keith, great to have you. All right, so with that said, the link is on your screen, financial.com/thirsty. I want to say thanks to Jeanette and Hubert for allowing me to come in again. I want to thank all you guys for putting up with me for the last hour and a half. It's the holiday weekend. You had a lot of places to spend your time. I hope I did a good job. I hope I kept it pretty straightforward to show you how the big money pushes stocks. And that's why I keep coming back, because these trade ideas just seemingly keep working, which is no shock because historically that's what they do. We have the data to back it up. So thank you for your time. I wish you and your families a wonderful holiday season. It's a happy belated Hanukkah and Merry Christmas, Happy Kwanzaa, and Happy New Year. So cheers to another amazing year. This holiday season has been unbelievable. And hopefully January is going to keep it rocking. And if it doesn't, we'll flip and we'll go hunt for bearish trade ideas. We just don't care. All right. Take good care, gang. Thank you again. Wish you and your families all the best. Stan, so Stan, if you're having trouble, we might be at number 50 because I'm going to yank the link at number 50. If anybody bought twice, we'll just cancel it. I don't know if a replay is going out because if we hit 50, I don't see why it would. So we should, I think, be finished tonight. That should be the end of it. Okay. Just make sure if you do go to the page, you got to use /thirsty. That's the only way to get the deal. And you'll be grandfathered in every year at $397 for platinum access. All right, take care, gang. Wish you all the best. Bye-bye. Thanks again for coming.